Internal Revenue Service IRS tax news. Closing a sole proprietorship. A sole proprietorship, there's a link to that here. Someone who owns an unincorporated business by themselves. So we're talking about a single owner that owns the business, typically reporting on a Schedule C, as opposed to having to file some separate kind of tax return, even if it's a flow-through entity like an S corporation or a limited liability company. You would, in those types of entities, you would have to still file a separate tax return that would flow through to the individual tax return, typically for the taxation with the form of a K-1. If you're talking about a sole proprietorship, then you're basically just tacking on that Schedule C to the individual tax return, flowing into then the 1040, the main tax return. So we're talking about something that's part of then usually the standard individual income tax filing with the addition of that Schedule C. Now, because it's kind of part of the individual income tax filing, it's usually easier to close down a sole proprietorship than it would for a separate legal entity, a separate corporation like a S corporation or a C corporation or a limited liability company. But you still want to make sure that you take all the steps to close the business properly. Otherwise, you can have things lingering on when you're trying to move on to whatever the next thing is going on, and you still don't have everything closed up properly. So you must take certain actions if they want to close their business. They must file final forms and schedules, whether they've been in business a few months or many years. Here's information on typical final forms and schedules that a sole proprietorship needs to file when ceasing operations. So we're going to close down the operations, and unfortunately, there's a lot of businesses this year that are in this situation. They're trying to close things down, and you want to make sure that you do that properly so that it just doesn't keep nagging you as you try to go forward to whatever the next thing that we're trying to do will be. So income tax returns. The sole proprietorship must file Schedule C, Form 1040 or Form 1040-SR, profit or loss from the business. So we still got to file the Schedule C with Form 1040 U.S. Individual Income Tax Return. So there's a link to those Schedule C in the tax return here, or Form 1040-SR U.S. Return for seniors for the year in which they go out of business. Also, with their Forms 1040, sole proprietorships may need to file. So obviously in the last year, you're still going to have to file the tax return. You got to file the Schedule C, which is going to be attached to the 1040. You want to indicate that this is the last Schedule C for that particular business entity. Okay, so sole proprietorships may need to file Form 4797, sale of business property, if they sell or exchange property used in their business. They also need to file this form if business use of certain Section 179 or listed property drops to 50% or less. Form 8594, asset acquisition statement. If they sell their business, there's a link to that form here. Schedule SE, Form 1040, if they're liable for self-employment tax. So if you had a positive income, then you probably have to pay self-employment tax. So you got to do the standard Schedule SE self-employment. So employment taxes. Sole proprietors with one or more employee must take final federal tax deposits. So note that if you're dealing with employees and you're cutting things out in the middle of the year because you're having possibly cash flow problems, then you want to make sure that you finish up on all the payroll obligations, because the payroll obligations can be particularly problematic for multiple reasons. If you have like lawsuit issues, or most lawsuit issues with a business often typically come from basically employees, unfortunately. So you want to make sure that you're completing the obligations with the payroll as much as possible, and that includes the withholding. So when you pay the payroll, obviously you have to withhold Social Security, Medicare, federal income tax from the employees, and then pay it to the government. Now, if there's a cash flow problem, then you're probably, many businesses get in the situation where they're like, well, I can still pay the employees the net check, but I'm having trouble. I want to pay them, but I'm having trouble, of course, paying the payroll taxes that I withheld. You don't want to get into trouble with that, because the IRS could think of that as basically taking money from the employee because you're withholding their money and then not making the deposits, which means that you're not only not paying the taxes, but you're kind of, they think of it as almost stealing from the employees, because it's really their payroll taxes that are being withheld. So if there's with the cash flow problem, you basically want to see as much as possible to get through the payroll obligations. In my experience, that'll save you time and problems in the future. So that means the federal deposits need to continue through the year. If sole proprietors don't withhold or deposit income, Social Security, Medicare taxes, the trust fund recovery penalty may apply. So there's a link to that penalty here. The penalty is the full amount of the unpaid trust fund tax. The IRS may impose it on all persons who the service determines is responsible for collecting, accounting for, and paying these taxes, and who acted willfully in not doing so. So they kind of crack down on the withholding idea, because in their mind, it's not just you not paying your taxes, it's basically taking money out of the employee paycheck and then not paying the IRS the taxes that are really the employee's obligation. So a responsible person can be an employee of a sole proprietorship, an accountant, or someone who signs checks for sole proprietorships or has authority to cause the spending of business funds. Sole proprietors need to file Form 941, employer's quarterly federal tax return, or Form 944, employer's annual federal tax return. So if you're obligated to file the 941s, the quarterly tax returns, you want to make sure that you do that throughout the end of the time period that you're closing the business. And then when the business is closed or when no more payroll is being filed, then you want to still make sure that you're finishing things up on the yearly basis with the final form, possibly the 940, and still following through with the W-2s and whatnot, so that you can close everything out properly on the year. For the calendar quarter in which they make final wage payments, they check the box and enter the date final wages were paid on line 17 of Form 941. So you want to check the box and say, hey, these are the final wages. Or line 14 of Form 944. They must attach a statement to the return showing the name of the person keeping the payroll records and the address where those records will be kept. Sole proprietors must file Form 940, employer's annual federal unemployment. That's the FUTA tax, F-U-T-A tax returns. There's a link to that here for the calendar year in which final wages were paid. So that's going to be the year-end tax return, the 940 tax return. This one is one that many people may not, you might say, oh, okay, I stopped in the middle of the year, and so I did the first two 941s, possibly the first two quarters, and then possibly didn't finish things up with the 940 at the end of the year. You want to make sure that even if the business is closed, you finish up with the 940 and the W-2s and the W-3 at the end of the year to close it all out properly. It'll save you headaches in the future, most likely. So they need to check box D in the type of return section to show that the form is final. Then we have the sole proprietors also need to provide Form W-2 wage and tax statements to their employees for the calendar year in which they make final wage payments. Generally, they furnish copies B, C, and 2 to the employees. They file Form W-3, transmittal of the income and tax statement. That's like the consolidation of all the W-2s. They do that to transmit a copy A to the Social Security Administration, basically going to the government. Reporting due dates. Visit irs.gov for information on employment tax due dates. There's a link to that here. Other reporting sole proprietorships with employees. If employees receive tips, the sole proprietor must file Form 8027, Employer's Annual Information Return of Tip Income and Allocated Tips, to report final tip income and allocated tips. If the sole proprietor provides employees with a pension or benefit plan, they need to file a final Form 5500, Annual Return Report of Employee Benefit Plan. Sole proprietorships that pay contract workers. Sole proprietors report payments to contract workers who they've paid at least $600 for services, including parts and materials, during the calendar year in which they go out of business on Form 1099 NEC, non-employee compensation. So these are people that, of course, are not employees, but you're paying them and they're not incorporated, so you got to issue them the 1099. So the IRS still wants you to issue them the 1099 in the final year and make sure that's an end of the year type of thing, something that's typically done at the end of the year. So again, if you stopped in the middle of the year, there might be a tendency to say, okay, I'm done with this. I'm not going to do anything else, but you still want to especially get the payrolls out and then get the 1099s out if possible, because it could save you time with the corporation or the company or the sole proprietorship causing you problems in the future. So some filers must file forms 1099 electronically. Those who file paper forms must also file Form 1096 annual summary and transmittal of U.S. information returns to transmit paper copies of Form 1099 to the IRS. Record keeping. How long a business owner should keep a document. There's a link to that here. Depends on several factors. These factors include action, expense, and event recorded in the document. Businesses should keep records relating to property until the period of limitations expires for the year in which they dispose of the property in a taxable disposition. Business owners should keep all records of employment taxes for at least 4 years. I would keep them more than that for the employment taxes, because again, those are the areas when there's a problem. It's often with the payroll taxes, and if there's some kind of lawsuit or something, it's often with employee kind of information and whatnot. So you want to make sure that you have all that information available and be as transparent as possible with it, so that if there is a problem that comes up in the future, you can have the information you need to deal with it. Employer identification numbers. Once the IRS has assigned an employer identification number to a sole proprietorship, it becomes the permanent federal taxpayer identification number for that business. So it's kind of like the Social Security number. This is basically often the EIN number, employee identification number. It acts as kind of like the Social Security number of the business. Therefore, even if you do not have employees, you may well have a Social Security, an EIN number of the business, so that when you have to give the number to someone else, such as someone who needs the 1099-U, you don't have to give out your Social Security number. So you may well have an EIN number if you're a sole proprietorship, even if you're not having any employees. So to close their business account, a sole proprietor needs to send the IRS a letter that includes the complete legal name of their business, the EIN, the business address, and the reason they wish to close their account. If they have a copy of the notice that the IRS issued with the EIN assignment, they should include that with the letter. They should write the IRS at Internal Revenue Service, Ohio 45999. Sole proprietors who, 1, made a federal tax deposit or other federal tax payment, 2, are liable for any business taxes, or 3, are notified by the IRS that the business tax return is due, must file the appropriate tax returns before the IRS can close their account. So basically, if they're saying here that you want to close the EIN number out, but you can't close the EIN number out if you made federal tax deposits, or if you owe the IRS money, in essence, you can't really close out the EIN number, because they see that as a Social Security number and they want the EIN number there when the payment is made. So they can't close it out until all payments are paid up, and then are liable for any business. So if they're liable for business taxes, you can't close it out. Therefore, are notified by the IRS if there's some kind of notification that there's a tax return due or something like that, some action that needs to be taken place related to the business, related to that particular EIN number, then again, you can't close it out until that's been taken care of. So more information can be found down below. There's a link to these items. Publication 334, Tax Guide for Small Business for individuals who use Schedule C, closing a business with video, Small Business and Self-Employment Tax Sender, Publication 3402, Taxation of Limited Liability Companies. IRS provides guidance under the CARES Act to taxpayers with net operating losses. There's a link to those items here. There'll be a link to this in the description.